to the other places that you actually want to put your money in. So I think it's pretty good.
Awesome. Thank you, Chris. Anyone else want to share their perspective? How about this as a question? If other exchanges such as, I don't know, Charles Schwab, TD Ameritrade, and so on decide to get in on the action, what would prevent them from gaining a large market share?
I mean, they're just not established right now. Really in the market. I mean, they are in currency exchange. You know, you can go to them for CX, stocks, bonds, all that. But there's just so much already being held in wallets owned or not or managed by Coinbase. And they've really been the biggest with regards to cross currency exchanges in the crypto market. So really, they're just coming at it 5 years too late, frankly.
I think initially, they were the easiest game in town, and as good business people, they charged the most. They charged 0.57% or something. So they made a lot of profits, So those were the early days. They were one of the easiest platforms to use. And then, like the other guy was saying earlier on, you usually have to go into Coinbase, buy your stuff, and then transfer to Binance, because Binance didn't use money in the beginning. They didn't get the regulatory approval. So that was the game there. I think today it is true that they have they're really entrenched. I mean, the report is that they have about $230 billion of cryptocurrency, of Bitcoin actually, and out of that, 122 is actually institutional. So that's another story. The thing about how viable they are, that's another huge story. The institutional side is really, really strong. But as to what's to prevent other exchanges coming in, there is little. There is momentum, but it's so, when it hits mainstream, the whole branding thing, Coinbase is a great name. Everybody remembers Coinbase. It's so easy to remember. Just tell your friend Coinbase, and they'll always remember it. I've told a lot of friends they remember it. Binance, nobody kind of remembers that, and then Kraken is like, what? So I think going forward, their earnings from transactions, which is basically like 90% of it right now, is going to be impacted because you're just going to have a lot more competition. But I think what's going to happen, and we know that's going to happen, they're going to diversify like any other good business into DeFi, into finance, into, in fact, they are working with BlockFi already. So in that regard, I think from my personal opinion, is that it's a strong business to get in because it's not here today, gone tomorrow. I think they'll keep going where they are. And Binance and another exchange has actually gone into fractional Tesla shares and a few Apple shares and all that. So it seems like they have a long range plan, not just in financial services, but in fact, the other exchanges should be nervous because they're going into 24/7 trading of regular stocks. And they have the money. I mean, the fact that they didn't issue an IPO to raise more money, because they don't need that. They have like $1 billion right now cash, and they are doing like 1.5 billion every month or something crazy. So all in all, I think although the revenue from transactions will go down, because I don't think they can keep charging 0.57%. The fact is that they are so clearly far and ahead of the pack. They will, in my opinion, they will keep leading into new spaces. But a parting question or something to consider is what they will do, what this IPO will actually do to the whole cryptocurrency space. The cryptocurrency space also is actually a little strange, and I really don't want to monologue, but I feel obligated to make this known because it's a huge difference between Bitcoin and everything else. I am not a maximalist. You don't have to buy Bitcoins from me, but I just need to say that these are different animals or different mediums, basically. Not all cryptos are the same. So on one hand, we say, what will Coinbase IPO do to the whole market? I think, I won't monopolize here. I think it will lift it up. But at the same time, that market, the cryptocurrency market, is actually divided, segmented between Bitcoin and everything else. Bitcoin is sound money, is different. All the others are basically startup, like kind of projects, like businesses that you invest in. So it's a very different kind of consideration. I'm going to leave it at that for now. Thank you.
Thank you for sharing, Kwang. Does anyone have anything they'd like to add to that, Kwang's points, or anything about the exchanges in particular?
I'd just like to kind of reiterate what Kwang was saying, especially with this exchange. This is really going to force the traditional exchanges to rethink and have to force them to innovate because there are only certain trading hours, and you have to wait on a weekend to place or to buy or sell. I've been on Coinbase, I think, for 4 years or so. Their CEO came and spoke at our club in San Francisco. I split my time between Canada and the US. And Brian Armstrong he made a very compelling case. There were about 50 of us in the room, just got to meet him and whatnot. And we thought, wow. Immediately after that, being Canadian, I had my parents, my brothers, everybody sign up and buy Ethereum and Bitcoin and whatnot on that. So I think we're seeing a visionary at hand. And I think this is a no-brainer to invest in it come Wednesday. It's going to be really interesting, though, how this is, again, agreeing with Kwang, that this is forcing other exchanges that are going to be left behind. They already are. And I participate, and buy stocks on those exchanges too, but it is frustrating at times, even the wait time, right? So this is really the next evolution of where I think our financial world has gone. And it really solidifies this, I should say, creates this concept of cross-border is no longer. And that's really quite an exciting thing. So I'll end there. Otherwise I'd speak for hours on this topic. I love this area. It's fascinating to watch and so many things happening. The other thing I'd mention too is I just want to say, as a proud Canadian, that we introduced about a month and a half ago the 2 Bitcoin ETFs. So those are 2 things to look into and see as those evolve and what that means. So they're the tickers are BTCC.to, or sorry, on the New York Stock Exchange. You can find it there too, I believe, and then EBIT.to. So that's also just something as a financial vehicle I think would be worthy to note in this space.
Awesome. Thanks for those heads up. And thanks for sharing those thoughts. That brings to mind an interesting question. Like, what would be the biggest threats to Coinbase? Is it the traditional exchanges and brokerages, like trying to catch up and leveraging their considerable customer base and financial power? Is it the other exchanges like Binance and so on, offering way more alternative coins and thus taking market share? What do you guys, what does everyone think would be a big threat to Coinbase going forward?
My guess would be the traditional banks. I think the reason why I liked Coinbase and Binance a lot was because a lot of the exchanges like Kraken and Huobi and everything, they were getting. I'm a few years removed from investing. I kind of set it and forget it, but what I remember was that I think 4 or 5 of the other guys like Huobi, and they would lose billions and billions of dollars just from hackers and things like that, just people messing with the site. So even though like Bitcoin and cryptocurrency is supposed to be very decentralized and protect your money, it really doesn't do a good job in terms of that just getting your fiat currency to convert into Bitcoin or fiat to convert into the other currencies, because all of your wallet and stuff can still be exposed to hackers.
That's true. There are different vulnerabilities, right? Even though, let's say that someone can't beat the computing power of all of the transactions and proof of work things, type of things needed to destabilize something like Bitcoin or something else. There are different points of vulnerability, such as just getting the user's information and signing in and things like that, right? So how secure is Coinbase as a platform? Have they ever been hacked? Do they have any vulnerabilities in that regard?
I think in terms of wallet, I mean, there is insurance and there is security and all of that. So, I mean, naturally, I'm concerned that my coins will be gone. But then at the same time, I'm not keeping my majority of that. I've got my, my hard, my cold wallets and stuff. So whoever keeps a lot of coins there, you kind of, you really have to reevaluate. And also lately, if they are not secure, like I said earlier on, 122 billion of their 230 billion holdings is institutional. So institutional needs are really, really big. So this is one of the offerings that Coinbase has gone in, which is actually the institutional market. And that's very strong in terms of custodial services. So I really would not worry that much, because if they're not up to snuff, they can't take that market. I think changing the subject a little bit. I think the fact that CBDCs are coming up and all the citizens have to have a wallet and stuff like that. I mean, our federal government is not going to be running the bank. I think what is more likely going to happen is they will go through the traditional banks like, Morgan Stanley and all the banks right now, and they just basically issue a digital wallet so that everybody has one, so that CBDC can actually go in. So we already have the infrastructure. So the reason I say this is that what I'm trying to say is the market is so big right now. What we can think about is like, okay, Coinbase is going to go into banking, going to go into, stocks and all that. But, this whole huge Fed market with the CBDC happening, so much is happening. I'm not worried that they're fighting for the same market, because they will be defining very, very new markets that we won't even be thinking of. How the speed of money, I think the last time we talked about, the greenback's velocity is 4. And Ripple alone, just Ripple is 12,000. So the velocity of money is like, holy cow, this is so we can't even imagine the future that's going to happen. So again, reiterate, I don't think it's about competition, because the market is wide open. It's like the new frontier in Oregon. We're all going there to claim our 40 acres and 3 mules, I don't think it's a problem. And then security is not a problem. Armstrong was saying that, okay, one problem might be regulations, to slow down, the adoption of cryptocurrency. The other one is what if Satoshi, suddenly moved his coins? Then it will really fracture the whole belief system that we have right now, because those coins haven't been moved since 2009. So there's nothing we can do about that. So yeah.
That brings to a point some interesting ideas. One that you brought up is that Coinbase has been a first mover. They have a lot of the first mover advantages that comes with bringing this institutional product to market. And 2 is there's plenty of room for innovation with the future of money and the velocity of transactions and so on. So that it seems then that there's some sort of undefined market potential that we don't even know about. How does one go about, defining this and valuing it into a IPO valuation? Does anyone want to take a crack at that?
I mean, the easiest way is to look at the amount of customers that they have and the amount of trades and the amount of cash being put into the system and the amount of cash being taken out of the system. It's like any other CX that's out there. So you just trade them, or you treat them like the bank that they are. The issue is when it comes to the amount of money they've got stored. And this actually gets back to that previous comment about, if Satoshi moves his own coins. I mean, there's anywhere from 600,000 to possibly 1 million Bitcoin that are sitting in his wallet. And when you think about that in terms of a fiat currency, it is almost the greatest, Fort Knox of Bitcoin that's out there. And I have a feeling that he's A, still alive, and B, not going to cash out until this becomes basically the new, well, at least a comparable fiat currency to the dollar and yuan. So what is it going to do? I mean, it's going to be a bank. That's why it's going out there. That's why people want to be able to invest in it, is put in money for its success and its growth.
Those are fantastic points. So that brings up another thing, which is that Coinbase's valuation seems to be pretty tied to Bitcoin. Is that a fair statement to make? And if so, what are the threats there? If Bitcoin were to take a dive again, theoretically, and let's say that we experience another crypto winter event in which a crypto winter for others is basically defined as the lean years between the last cryptocurrency major drop and now. So there was a massive drop, I think, 2018, and then recently it jumped up a lot again. But during those times, times are a bit lean for the major cryptocurrencies.
The problem with cryptocurrency is you got to look at it as a macroeconomic currency now. It's no longer on the scale of, I mean, it's getting to the point where we've got GDP's worth of cryptocurrency out there. And so just as economists are going out and looking at like how the US economy can just take on more debt and yet not fail, you look at this and you think, will there ever actually be another winter? Well, why would there be? The only possible thing that could cause a crypto winter is if, once again, Satoshi just bails on his coins and becomes, the world's fastest billionaire. Because at that point, you've just got so much more supply in the market, and people will buy it, so it'll be picked on up. I mean, heck, there's the commemorative action of being on Satoshi's blockchain. That would be awesome. But other than that, there's no inflation when you think about it, because it's not tied to an economy. How do you crash Bitcoin other than somehow convincing people that it's worthless?
Especially since it's been added as a line item to some major companies now. That was just amazing to see. I think it took a little longer than all of us were hoping for, but that absolutely great points, Jonathan.
I think that whole same old argument about like Bitcoin or cryptocurrency being volatile and therefore we should stay away, it's so tiring. It's so silly, because what does it mean to be volatile to begin with? You change your tactics. If you hold it for a year, who really cares? If it doubles in price for 11 or 12 years, who really cares? Are you not going to go out driving because it's hailing? No, you just drive slower. That's all. Just adapt to it. But anyways, so back to the whole thing about volatility and the crypto winter. I think Jackie was saying that too, and it's accurate. I mean, in the 2017, it's basically retail driven. Suddenly everybody and their uncle and the taxi driver and the Uber driver, they're all invested in Bitcoin. So it's shooting up the moment, and we know how fickle-minded everybody can be. At the first shot of problem, they start selling, so it crashes. Right now there's so much institutional, and it's not. Don't even just believe me. I mean, now nobody even talks about if somebody spends $20 million to buy Bitcoin. It's not a big deal at all. I mean, 3 months ago it was a big deal. So starting MicroStrategy and Tesla, and then the mainstreamers are more important. The mainstreamers are spending. Massachusetts Mutual is spending like, I don't know, 2% of the money, and they are so conservative. So a lot of mainstreamers are buying Bitcoin to put in their treasury. So recently in the last, let's see, 3 weeks or something, every time you see a dip, you will notice that it goes back up. It never happens in 17 because it was retail. Now it's institutional. Michael Saylor just bought another 15 or 10. He buys it every few weeks or so with the cash flow. He just bought it at 59.7. This is his price. Since most of his institutional money have bought coins at about 40 to about 60. So that's like the floor. So on that basis alone, this is indeed a different time, that the crypto winter is going to be much milder, if even it's going to happen. And back to, I think the first guy was saying that that's a Bitcoin narrative, which is like, it's got no inflation, that fixed amount. I'm totally for that. I totally get it. So that really kicks in like maybe another, I don't know, 6 months, a year or something, but when it becomes mainstream, then people really experience it. Right now, there is also still demand and supply impacting that. So on that front, if you think of, for me, if I think about buying Bitcoin or buying Coinbase, Coinbase is spread. It's a risk that's spread. If one coin doesn't do well, it doesn't really matter. They cream off. They're an exchange, so their business model is creaming off. So it's a different investment animal that we should be thinking about. I will buy my crypto, I will buy my Bitcoin, I will hodl it forever. But Coinbase is creaming off. Whatever coin succeeds or fails, it doesn't matter. They cream off. So in that regard, it's a very different game, and I feel good about putting some money there. In terms of valuation, again, it really doesn't matter now. There's so much money out there. We're just gonna buy it. I assure you, in another 2-3 months, it will do 20, 30, 40, 50% more. The fundamentals don't really work because it's forward looking. And as this group has been thinking about it, the forward looking is that there will be new industries happening and all that. And Coinbase right now is priced for perfection. Everything that it's doing is like, right, they released the first quarter. Why did they release it? It's just incredible. So there will be dips and all that in terms of the price, but it doesn't really matter about fundamentals because it's forward-looking, kind of like Tesla. I mean, Tesla is not worth that kind of money. If you look at it in terms of what they are producing, it's totally forward-looking, and there's too much money sloshing around. It's gonna go. Thank you for listening.
Awesome, thank you for sharing that. Wow, we have a lot of really cool, discussion topics on the table, and lots of ideas here. So I guess pivoting to the IPO itself, we know that it's going to list in 2 days, and we have an idea of the early reports suggesting that its valuation could be 100 billion. What do you guys think of this valuation? Is it a fair price? Is it priced to perfection? It cannot possibly fail for the next 7 years, otherwise it can't justify it. Or are we just seeing the beginning of a new era for the coin, or for the company?
I don't think it's going to actually end up being valued that high. I think it's going to end up probably in the 50 to 60 billion range. Yeah, I know it's spiked up today. That said, is that a proper valuation? That's tough, because it's not just being valuated on the number of customers, but also basically the market cap of each currency they're exchanging, each crypto. And so like, what's the market cap right now on each of them? I know Bitcoin's 1.1 trillion. So if it was 68 billion just off of 1.1 trillion, no, but then you have to count in everything from Ethereum to Dogecoin. And with that, I mean, I don't know. Am I going to buy into it on Wednesday? I am. I'm going to put some money into it because I think it's going to still go on up, because it's as a bank, once again, they're the most established, but it's tough to do that valuation.
Oh, go ahead, Chris.
Oh yeah, no, I wasn't going to add too much. I would say that I'm a little bit different from most people in that I'm kind of a Bitcoin skeptic. But I do think that, there was a lot different narrative in like 2017, 2018. Basically, like a lot of people had a lot of fear because, the whole narrative was that it's supposed to be a currency replacement, something you buy things with, and it's really bad at that. But, what I think is a lot different nowadays is that with NFTs and the involvement of people using Ethereum, that you actually do have more use cases. So, it can be kind of an exploding thing. So depending on how much people in my opinion, I feel just like depending on how much people kind of embrace like things like Ethereum and using making more use cases for cryptocurrency, I think then you have maybe a bigger evaluation. But in terms of fundamental analysis, I'm a beginner, so I don't know too much about that.
4개월만.
So
Okay.
to go to Chris's point, and I just started going and Googling various market caps. Like the entire Chinese market in 2019 was about $6 trillion. So think about 1/6 of China's
와,
market cap is what is being traded on basically their platform alone. Frankly, I mean, they are the biggest dog out there. So, and I hate to say it, but I was with you, Chris. I mean, that's why I sold earlier, was I just did not think it was going to become a thing. I thought that people were going nuts over this. I mean, hell, I had a number of them back when you couldn't buy a pizza with them. And they were, all of a sudden they've got value. Cool, I'm going to bail on that. Why not? But now, I mean, I hate to say it, but it's something that's becoming at least a transitional currency, if not a proper, challenger to at least the yuan. I gotta wonder if it's almost past the yen in this already. You got to look at the euro on that. So, and it's on the international stage for currencies. We can't say that it isn't anything anymore.
Yeah, no, I think I agree with you on most part of that. I think that the thing I was trying to say more of was just that I think it had more of a reason to fall back in 2018 because the whole narrative was it being a currency. But I think they changed the narrative kind of around 2019, end of 2019, 2020, to really kind of like heavily pivoted towards is strictly a store of value replacement for gold. And they kind of extrapolated the value against gold. And then, I think it was more reasonable for Bitcoin to pick up more momentum than just having that same currency narrative.
Agreed.
If we take the thesis that cryptocurrencies are here to stay and that most of them will do well, or at least the ones that are more than mere projects are going to do well, and they have a lot of room for innovation, and that would suggest that Coinbase is going to do well in the long run, right? But let's discuss Coinbase's business model. Like, how do they actually make money? And, is this business model sustainable over the long run? So Coinbase, they collect obviously transaction fees, and they're looking to do more than cryptocurrencies as an exchange. They're a brokerage firm, and they presumably have a lot more ideas up their alley. However, as we've seen with Robinhood and all the other traditional brokerages, they began to be a fierce competition for transaction fees, culminating in a basic race to $0 in terms of each transaction. Now, this probably won't happen for the cryptocurrencies for a multitude of reasons, but would it be fair to say that competitors such as Kraken and Binance could eat into Coinbase's transaction fees and as well as the traditional brokerages? And how would that impact the company and its valuation?
I don't want to be the one that just keeps talking on this, so I want to hold off for a second.
Sure. Does anyone have anything they want to contribute? Is Kaiser still with you, Peter? Is Peter still with us?
Yeah, I don't know. Yeah, I don't want to talk too much either because I'm pretty much out of it for the last couple of years. But just I think from public sentiment back a couple of years ago, the general sentiment was just that Binance and Coinbase were the only two secure platforms, and everybody else was losing kind of millions and millions of dollars, if not billions. And then even Binance, I think I'm Googling right now, they were hacked for I think 40 million Bitcoin a couple of years ago. So it seems like from I think consumer sentiment, security standpoints, Coinbase has been the most secure.
So to Chris's point, they have a head start on everybody for that. You know, you look at how long will they been able, or how long will they be able to hold it against Chuck Schwab, you know, even though the Robin Hoods, but also the other cap indexes that are out there. Well, they don't have the framework built to deal in coin yet, because they know that they, you know, because it's not a US, it's not dealt in US dollars. If there is no insurance on it, you don't have the FDIC backing Coinbase, but at the same time, they actually back themselves, and that's, you know, once again a selling point. Yeah, do you think that they're going to get overtaken quickly? Is the valuation worth it? I think they have at least 3 years of just runway on the fees they can charge for this, because they're not going to get overtaken. They're not going to get passed by any of these. Yeah, I think that probably you're going to see one or two smaller banks, maybe even credit unions, start to jump on it because they have a little bit more flexibility. But none of the big players, your Citibanks, your Chase, your Wells Fargo, and none of the investment operations are going to try to take it on, because they just don't. It's, if you build it, they will come, and they've built it. It's been there, and people have just overlooked them. And now that they're IPOing, everybody's going, "Oh crap, we got to catch up."
I think it's like a case of too little, too late. You know, I mean, I agree. Anyways, my thoughts are all over the place, but I'm trying to center this. Like I said earlier on, I really believe that there is so much happening that what we think, like we are trying to compare with their business model right now, which is really skewed, because a large percentage of their income is actually transactional, and we know that that cannot be, you know, because of the price for perfection. There is so much forward pricing involved, that things that we don't even think about. I mean, these people are running businesses. They have front row seat into the data. They've got business plans that we will never hear of until 2 years down the road. And it's like, oh, did you know? So on one hand, of course, this is the only data we have. We want to talk about it. But on the other hand, it's really a moot point, especially when you have someone like Armstrong or even Elon Musk and all that, you know, this or the Amazon guy. You know, they are great people with great ideas. It's a moving target, not just moving target. They are proven. So it's almost like a leap of faith, but it's not. These are people who are proven viable. So if we know that his income or their income is basically retail, I mean, they knew of this a long time ago. You know, they had plans. So I'm not saying to jump in with your feet without looking, but it's just, in my mind, I feel a little silly trying to decipher the future basing on just a few things that are shown to me right now. So I you know, if we have done that with Amazon, no, it would never be. We would, you know, it's gone up by what, 10, 20, 30 times. Same like Tesla and all that stuff that we don't think of. It's already planned already months and months ago. So to me, investing is very dependent on the leadership, whether they're proven or not just in terms of management, but also in terms of vision and practical, viable, visionary person. So that to me is really, really important. I mean, if you look at the numbers, over 90% of their revenue is actually transaction fees. That means when John or Jane buys Bitcoins, they get something. So, okay, they talk, Coinbase talks about the custody business and all that. Right now, it's a small fraction of that. We know it will be bigger, but it's still such a small fraction. Now we have BlockFi, the loan, and all that stuff that is happening. So all that will develop. It's a leap of faith. It's a matter of believing that they will be, and I believe so, because it's a cream of business, and at the same time they will transition and pivot to other parts that will be what's called profitable. The bigger thing that I talked about earlier on is whether the whole cryptocurrency ecosystem is actually going to be elevated or not. They did a survey, and I think at that time, the survey was done, 1,000 people responded. 10% said, yes, it will be seriously impacted negatively. 23% said, somewhat. Another 26% says, somewhat but upstream. So we have about 60% or 70% that basically says that the ecosystem will be expanded, and only about 10% or 15% that says it will be negatively impacted. So the early on question was, is cryptocurrency, or even the phrase that says, is cryptocurrency here to stay? I mean, that's a huge thing. You know, if we decided that cryptocurrency is here to stay, then this is all viable, because Coinbase is a cream of business. It definitely will, you know, so those are fundamental questions that we have to really think about. Everything else is based on very myopic data, you know, totally relevant and yet not that relevant. That's my piece.
So I have a question for everyone that's kind of thinking about this, because it's like, you know, we can invest in the stock when it comes out, right? Or is it better to just invest in Bitcoin? Because from what I've gathered from everyone here, it seems like Bitcoin is probably a better option if you have the funds, if you want to go all in for it, or would it not be? You know, like, because it seems like there's a lot of believer in Bitcoin, you know, in this group, but we don't know what's going to happen. And it's like, are we betting on the coin, or are we betting on the system in which the coin is traded, or should we diversify, you know, and sort of like the ratio of diversification when it comes to, because, you know, I don't have a ton of money to invest, but I do want to invest something, you know, so I just want to hear your thoughts on that.
Yeah, I certainly wouldn't even draw that conclusion or hold that conclusion to solidly, I guess. I would say they're completely separate things, and definitely I would say diversify. You can't go wrong with that, of course, right? When it's coming to those two entities, just to look at it that way. And for Kwong's points, I agree that, and this is why I like Kathy Wood's ARK ETF so much, and her philosophy, her investment philosophy, I think is the closest thing we could see that's relevant to Coinbase's IPO, is that it's not just based on the benchmarks that we're used to. Coinbase is going to innovate and do so many things over the next 5 to 10 years that we can't even understand fully. We can only be skeptical of. And I think that that is worth investing into for the long run. So my strategy, same like yourself, Trevor, like you never want to put too much in, you know, you want to make sure, you know, so I'm going to put some in right as a market call like that morning. I'm going to watch and see how it goes the next few days, and then put more in over the upcoming weeks as well, because I think we're going to see a lot of volatility. But I always have the bias that I think something like Coinbase, you know, buying into an exchange like this early on is not a bad idea. But both, I would say, I'm actually more of a bull on Ether, to be honest, Ethereum, than I am Bitcoin. But that's for, again, other reasons and another conversation. So I'd say diversify, and I would go for all three or all two, you know, versus just one or the other. I think Coinbase is a very different thing than a currency. So
that's a great point.
I mean, I was going to say, Jackie's right. You want to diversify in every
would agree.
portfolio.
Sorry, go ahead, Jonathan.
Oh, sorry. I said you want to diversify with any portfolio. So, you know, Jackie's right.
You know, I want to agree, but at the same time, I just I want to be contrarian about that. You know, so back up a little bit. Like, okay, first thing I've noticed in markets, you know, if you go onto the market and at 6:30 you do about 7 or 8 a.m., it's so volatile. So it either keeps shooting up, and if you buy it, I bet you at 10 o'clock it settles. Usually at about 10 o'clock Pacific time, it kind of settles. Whether it settles higher or settles lower, I don't know, but that's where it settles. Having said that, yeah, conventional wisdom is that, oh, you're always diversified. But But if you really look into the whole Bitcoin rabbit hole, the narrative and all that, it's not. It's like, I'm not a maximalist, but the Bitcoin narrative is that it's sound money. So if you look at that playing field, that scenario to consider, it's like we've got such lousy, terrible, corrupt money, bad money policies. You know, with the inflation, money printer go burr, and banks and all kinds of things making changes at the last minute. You know, not even the libertarian values, just talking purely on economics. You know, in history, we have glass beads that were worth a lot of money until people discovered how to make glass beads. So they're like, oh, we can't use that. Then finally we discovered gold is the one that you can't really manufacture a lot of. But that isn't even true. Gold is like 2%, you know, every year, 2%. Can you imagine if this gold is $50,000 an ounce? So we'll be mining gold, seawater, and have a lot more gold. So gold isn't finite, it's infinite. So that's bad money policy, inflation and interest rates and all that. So that whole Bitcoin narrative is based on the coming paradigm shift, and therefore it's Bitcoin. So in terms of diversifying, according to the Bitcoin maximalist, it's like, why would I diversify into an inferior thing? Because everything else is bad money policy. So why would I diversify into that? So it's really. So I do diversify. I'm not a maximalist. I've got some houses, I've got some shares, I got some hobbies, and I've got lots of Bitcoins, basically. Well, not majority of my things. So I just want to point out to it, these are different species of fish or investments to be thinking about. It's not all lumped together. You know, gold, should we buy gold? But where would gold go to? Ethereum, what about Binance? The Binance coin or the smart Binance chain is cheaper, faster, more efficient. And it's and Polkadot and all that is competing with Ethereum. Ethereum 2.0, yes, but 12 to 18 months if it's executed well. Yes, it's got a lead time right now, and there's no game but Ethereum, so it's working for all this while. But now you just look at Binance. Why is Binance shooting up from, I don't know, 300 to like 400 or 5, whatever, you know? So there are reasons to that. So it's like pick your poison, basically. You know, you're not a maximalist, but you have to remember that these are different parts that it takes care of different needs. It's not all just investments, you know, it's just that. This is my obligation to keep reminding you, every one of us, including myself, that these are different times. If I'm a maximalist, it's like Bitcoin only, nothing else. If.
Awesome. I want to define some terms for everyone in the room here so that we can kind of better frame our approach. So there's many different styles of investing, but for stocks in particular, there tend to be several different approaches. One is called the technical analysis approach. That's where you look at charts, you look at price, volume, momentum, and you try to figure out or predict where the stock price is going to go based on reading those charts. There's also the fundamental analysis approach. The fundamental analysis approach considers the financials of a company, the fundamentals behind a company, hence the fundamental approach name. And that means, like, for example, as competitive advantages and position relative to other companies in its industry, how powerful that industry in the first place, like how much of the market share they've taken, and things like that. So you might look at the financial statements, you might look at statistics and metrics such as revenue, year-over-year growth, price to earnings ratios, and things like that. So that covers fundamental versus technical analysis. Now within those two, there are two different styles. One is called value investing and one's called growth investing. So I think a lot of what we've been hearing tonight has to do with growth investing. Growth investing basically says that something may appear pricey today or just a fair value, but because of its future growth, you can't simply evaluate a company on its current earnings because of what it's going to do in the future. So that's the reasoning that's used to recommend strategies such as investing in Tesla or Bitcoin and or Coinbase, if the fundamentals seem to show that it's going to take, say, 30 years for it to justify this price, according to a more fundamental value approach. So in summary, the growth approach is to say that if you're looking at investing in a company, you got to consider the future potential of the company, not just what it's currently doing. The fundamental value approach looks at how valuable is a company today and what is its fair value. Like, is there a discount to the intrinsic value of the company based on however you want to value it, like according to a discounted cash flow analysis, according to its price earnings or price sales analysis metrics, ratio analysis, whatever, right? So there's several different styles. It's, no style is completely correct, although I will say that the fundamental approach has been more correct than the technical approach over the long run. I may be biased because I'm a fundamental investor, but I would say that over decades, the fundamental approach tends to outperform the technical approach. Now, whether the value approach versus the growth approach is more correct, it remains to be seen. But there's a debate on these different subjects, and it's kind of up to you to choose where your risk tolerance is and how you want to evaluate a potential investment. Does anyone want to share their particular method of analyzing investments, and whether they think something is correct or not, or which approach is the most superior?
Oh, that is a really tough thing to make, because you've got a number of different things that you're just even trying to deal with. That's everything. I mean, you deal in the wide world of homes as well, and that is probably, in the California real estate market, your most solid investment these days. That said, you should be bullish about coins right now, because crypto's moving fast. And I think it was either Kwong, Chris, or someone commented that you got to get in on it early in the morning, and then see how it's grown that day, because it is volatile as heck. So play it, day trade it. That's great. But you're going to want to put maybe 10% of your investment portfolio into, if that. I mean, that's still a lot that go into it. Having, I think it was, it might have been Jackie's point about, being safe and, diversifying. Have your assets in multiple categories. Don't drop your retirement portfolio into small company stocks. Make sure that you've got something, socked away and everything. Because, I mean, I'm looking around at the ages of most people in this. We're the ones that grew up in that, nice market crash where everybody lost their money. And we're going, okay, so what do we do? Do we want to invest in this market? I think we're, frankly, the new silent generation. We're going to be conservative about our assets. And yet we got something right in front of us that is a veritable gold mine that we should definitely play, but we should be conservative about it.
Absolutely. And just to follow up on that, because both of those were my comments. So to make sure that I clarify, for me, my approach will be having 3 sort of buy opportunities likely in the next month. And I'm not day trading. I'm going to hold. I just want to average in or continue buying if it just continues upwards. So I think for those of you in the group, just to add to Sam's kind of methodology, I agree with but the first thing I think fundamentally is your baseline is your age, your retirement investment goals, your retirement goals, your income, everything else. I'm almost 39. I had to think about that. I'm almost 39. I stopped counting after 35, but I'm almost 39 now and an entrepreneur. And so, I for the longest time in my 20s, my most important stock was my own business. So I very much fundamentally did that and honed my craft. And so now I'm playing pretty aggressively in mostly growth. I have some value as well, but mostly in the growth analogies because I've still got 20 years, fundamentally. And I think that this point in time in humanity is, as Sam mentioned earlier, a brand new era. My undergrad was in biochemistry, and so I've been watching genomics and deep tech and other areas. I do angel investing for the last 6 years in software startups, but I think fundamentally the world has changed and is about to change even more for the next 2 to 4 years. We're just seeing a shift occur. So that is my investment thesis of why I'm more heavily going into growth right now, like things like Coinbase, and absolutely like Jonathan just mentioned, I'm going to put like 2-3% of it into, over the next few weeks into something like a Coinbase or other things that are crypto related. So just as a reference point, especially because I see there's a bunch of younger people on the on the group, and I'd hate for you guys to see us talking about this and then put everything you've got into this. Like that would be a very, very bad idea. So just to give you some details or context.
Context is really important. Thank you for adding that. So to add on to that point, Jackie mentioned that you plan to be buying the Coinbase IPO. Is there a price point at which you wouldn't buy it, or are you just going to buy it at market price and then?
Exactly. Because I think of it as something that is, it's like a made up number right now. I literally see it as risky, but as also smart as some of the angel investments I've made, where, when you invest in a business, they tell you this is what we're going to do. And it like a year later is never that anyway, including my own businesses. I've done a software startup too, and it fundamentally changed and pivoted. So I don't think that it's as relevant versus how much of your own cash you're putting in. And if you need that cash in the next year or two, that's not a good idea, probably. So I'm putting in the money and just going to sit on it for like 5+ years, right? That's the goal. And so that's why for me, I don't really have a number in mind. I saw so many like murmurs of what the private markets were doing beforehand. It doesn't really matter to me. I've just said, okay, I'm going to put X amount in and I'm going to sit on that and then put a little bit more in a few weeks time, or some trigger points if it falls below a certain level, right? Like 30% from what it is to, on Wednesday morning, something like that. Then I'll be like, okay, buy more, so
okay.
Yeah. I hope that helps.
Yeah, so that's interesting. So you're kind of evaluating this as an angel investment. Basically, a lot of angel investments, we have no idea how they're going to do over like 5-7 years, right? Like relative to what they say they're going to do.
Yeah, and most will never exist exactly for 5 to 7 years later. And I just know I fundamentally regret. There was like an investors club that did invest in Coinbase when the CEO came to speak 4 years ago, and I did not do it, and I severely regret that. So this is my way to get back in.
An interesting side note.
I remember the last time that we were meeting over Snowflake. Remember?
Yeah.
We're debating the same thing, whether we should invest or not. But I think it's very, very different in terms of the entity Coinbase and Snowflake. Snowflake, is more traditional. I don't know the leadership too much and all that. I am actually really close to the cryptocurrency world. And like Jackie was saying, it's all made up number. I just believe that it will grow. So it is just getting some, and dollar cost average over, a week, and you'll probably regret it. You'll probably go up, but then, yeah, something like that. This is what I believe in too.
Does anyone have a price point at which they wouldn't invest, or is this a pure angel growth investment for everyone thinking of investing in it?
I would once again keep an eye on that market cap. I think that anywhere below, if you're looking at the angel investment round, anything below 80 would be good. I don't want to see that get capitalized at, or not market cap, but the, the valuation. If it hits 100, I would be a little bit wary, and I think that might have a bit of a drop at first, at which point we want to keep an eye on it and, try to hit it when it gives a little bit of a dip. But, that's more of my call is 80. Anybody else?
Feel free to make your predictions here. By the way, we're talking about market capitalization, not the price itself. So for those who are listening in, like we're not talking about like $80 per share or like $100 per share.
Yeah, it's 80 billion.
80 billion,
No.
yeah,
Yeah.
or 100 billion, yeah. Any other bold predictions? Speaking, a little side note, I had an opportunity to invest in the Kraken pre-IPO round, but I decided against it. So, well, you know, if it goes on to become something like Coinbase, then you have my eternal regret recorded right here.
There's somebody mentioned, I think it was Chris from Kansas had mentioned the NFTs. And I think this is not the topic we're here to talk about, I know today, but I think it's just like a kind of nice secondary, I guess, litmus point or something about this new era that's occurring. And for those of you that didn't see it or weren't aware, Sotheby's, the international auctioning house today, really made a fundamental new era shift in the art world, in the art collecting world, with NFTs, non-fungible tokens, with PAK, the artist PAK, which nobody really knows who that is. Might be a group of artists or one who's been doing a lot of really interesting digital artwork. I missed it because it was from 1 to 1:15 only. I thought it was all afternoon that you could buy a cube in their art, in PAK's art, through Sotheby's. And anyways, but tomorrow you can buy another cube. They're $500 US. And I think those are very interesting for those who are, I like collecting some art and stuff, but those who are interested in participating in something historical, where we're sort of seeing it's kind of like the equivalent of Tesla, investing so much into Bitcoin, somewhat similar. It's a different industry, but I think there's just so many things out there showing this new era that we're already in. And it just might be something interesting for you guys to Google tonight. Just take a look at Sotheby's and PAK. And you still have some time to buy in tomorrow, I think for only 15 minutes a window again, and Wednesday as well. And those are really pieces of art that I think in the future are going to be worth a lot. But again, they're only worth what people will be willing to pay for them, ideally, again, 10 years down the line. So I'm looking at that long run, and it's just, I thought I'd mention that because someone else had mentioned NFTs. And I think we're seeing all these different products, and we're going to see so many more in the next even 12 months like this. So we'll see who jumps on board that bandwagon. But back to Coinbase, I just wanted to mention that since it's kind of related for those interested in this field.
Well,
I'm definitely grateful, Jackie. I'm grateful for what you talked about NFT. I myself would not, though, because if I jump at every good idea that comes along, or even great idea, I don't have enough money to spread around, and the average of all the holdings to me would be an issue. The way I do my math, I've realized and found that if I go for a few wins only, as opposed to a wide spectrum, I just go for like 4 or 5 of them and hit it heavy. I only need to have 2 wins, and it will be incredible. And fortunate as I was, I did it right at 2010. So I set on Bitcoin. So it's not. But the whole idea of huddling and holding, it sounds much easier than it really is. I mean, how many stories have you heard? I sold at 80, I sold at 100, I sold at 200, I sold at 2,000, I sold at 8,000, I sold at 19,000. You hear so much story. It is a very, very difficult thing to huddle. So let alone holding so many portfolio. I mean, there's so many variables, there'd be like, if you got 5 items and all these variables are happening, there's going to be more than 25, 50 variables that have to pay attention to. So I may be getting all, or whatever it is, limited bandwidth. So I would say, Trevor, you're smiling there. I would say concentrate on a few wins. You only need to have a few wins. Warren Buffett says the same thing too. You have 5, you have to win 2 or 3 times big, and you hit a home run. So I respect the fact that NFTs will be big, but I really believe that as a sector play, if I can buy a platform, it would be great. For me to pick the next Mona Lisa, I feel very incompetent, and I don't think I can. And I'm not going to waste my time. I want to, so that's where I stand. But if you have the talent, go ahead and pick.
But I do see Jackie's point, like there's something about the novelty of joining into a movement for only $500, and that's not, it might be a lot of money for some people, it might not be a lot of money for some people, but I feel like that's a reasonable entry into being a part of history, and having some skin in the game. And
with Sotheby's, though, I want to mention that too, because this is my first NFT FT. So I just want to distinguish that for the group too, since that is, they're much better inclined to know who the next Mona Lisa is than we are with any NFT, right? So I just want to mention that. Sorry, Trevor, to cut you off there.
Well, I've done a lot of work in the art world. Like I made art for a long time and studied art movements and whatnot. And if you're Sotheby's, you can make sure that your artists make money because you can put money behind them, and that makes them noticeable and well established. So for me, it's like I studied all this art and all these different movements with like the young British artists, and all you need is a financier or some backing of someone wealthy or notable, and then your art suddenly becomes really important and it's truly saying something, but you're kind of drawing from the influence of that. So if Sotheby's is behind this individual, what was his name?
PAK, PAK.
PAK.
Yeah, we're not sure if it's a group or one person. Yep.
So, I mean, I'm sure it's a group. I feel it's a group like Banksy was a group, like I think it's a great partnership. I think it's a really solid business venture. I feel like that's essentially what it is. But there's so much art money to be made in art, and I think this is a interesting business idea that Sotheby's, is diving into. I'm going to read more about this because I've been busy working on my film and writing stuff, but this is something that I'm definitely going to take a look at. Thank you for bringing that up.
For sure. And Sam, I'll go back to Coinbase because I apologize. I didn't mean to take us on too much of a tangent, rather to kind of point it out that I see it as a very parallel opportunity of what's going on with Coinbase, that we've entered into this new era of digital and DeFi and whatnot. So we're seeing it across the board where these big players are entering the market and making it credible. Institutionalized. So I just wanted to mention that as kind of like a secondary reference point.
Sure. Thank you, Jackie. Yeah, I think you brought up a great point and made it salient that with the Coinbase IPO, it's basically legitimizing or bringing institutional attention or worldwide attention as not only like a proof of concept, but highlighting the point that there is a lot of money to be made in crypto from the traditional sectors, as well as the traditional buying and selling of crypto. And I think Kwang also mentioned a great point, which is it is not easy to hodl over the years, right? Like to borrow the crypto term, right? Like whether it's a stock or a crypto or anything else, right? I have some friends who bought Bitcoin back in 2012, and they lost it during the Mt. Gox incident, right? Some people said never again, whereas others were like, that's an isolated incident, I'm gonna buy again. And then, there were all those experiments with like, can I travel across the country paying only with Bitcoin? How how does it was an artist that did that, or a writer, that must not feel too good today. But this is a nascent industry, it's an early industry, and there's a lot of room for growth and innovation, and it's very exciting to see where this goes next. Yeah, so with that, I'd like to just, we're approaching an hour and a half now, and I'd like to just open up the floor for any other questions from the audience, especially for those who haven't spoken yet. Love to get any sort of ideas, questions that you like our venerable group to answer or talk about.
I had a question. Just because I've been out of it for a couple of years, I was wondering for the people who've been keeping up with it, what are Bitcoin's or no, I mean, Coinbase's plans for like the next couple of years? Are they getting into like loaning crypto out, getting people's interest, things like that? And what kind of services do you think that they're going to do, or are they just going to do more of the same?
That's actually the big question. Really looking out at what they said that they're going to do is they are actually looking at becoming, more bank-like in the sense that they can start to do investments themselves into things, and that will position them very interesting in the sense that they can buy and sell into any market without worrying about the CX that's going on. If they want to invest in Shenzhen or if they want to invest in Silicon Valley, there's little regulatory hurdle for them, because they can invest off of the coin itself, and then whoever's there can then go and do the actual transaction. So it's interesting in the sense that we have a large legal gray area about that, of how do you turn, because you think about what does a bank do? It doesn't just hold your money. The idea is that you give it your money and an investment in other things and makes money off of your money and gives you a small piece of that back in, whatever savings account, if you're, silly enough to have it in there. But with that, they can actually go and start, hey, damn, look at how much money they have in that coin. The question is, are you going to allow them to lend that on out? Because that kind of decreases the volatility of coins. So it's up in the air. We don't know what they're going to do.
I think it's a little known fact here. We know that Binance in the early days, it was just Binance.com, and then they had to become Binance.us, because Binance basically does not spend a lot of money in trying to secure the regulatory requirements. Now, Armstrong is different. I mean, not only is he American, but he actually spent a lot more money on regulatory considerations. So he's dotted his I's and crossed his T's. So as a new cryptocurrency company, I mean, already you have a target on your back, but the fact is that Coinbase has done really, really well. You talk about Ripple and all these other coins, they spend very little money on regulatory considerations, so they get into a lot of trouble. But Coinbase was smart enough. So as an example, this is pretty viable because they've got great plans. They make sure to take care of the foundation first. So looking ahead, I don't know what they're gonna do, but whatever they're gonna do, it will be allowed because they are very good in terms of regulatory considerations. I mean, Binance was doing really, really well until they run afoul of the US consideration. So it's not a small thing. Anybody can have ideas. So you have the competent leader and the incompetent leader, but everybody is a visionary. But then this is a proven case where Coinbase has shown that it makes sure it does the right thing, and they will not be stopped just because they can't do it. So in terms of whether there'll be a bank alone, I think they will go beyond banks. This is how I see, like Jackie was saying too, I had my business in San Francisco too. You start off doing something, and any business person who succeeds and say, oh, I planned for that, he's a freaking liar, because you almost never get to where you plan, because you pivot and you make it work. So the fact is that the quality of the leadership in Coinbase has proven to be competent, and I think they will continue to deliver.
It's a good point that people are willing to pay a premium for those who are willing to deal with the compliance issues, right? If you have an institutional group, people are always willing to pay more for that because there's more legitimacy. It shows that they're able to stand up under regulatory scrutiny, and it just legitimizes the whole operation. So that's a great point. That actually is a good competitive advantage over their fellow crypto exchanges, Binance and perhaps the other ones.
Yeah, I think the overall kind of consensus here that everyone who's experienced is stating is sort of the same thing, which is, we're seeing a new era. We've seen this kind of happening for a while, and now it's really gained steam. And it's sort of like saying, Tesla and the price it is right now, since that was mentioned earlier, I think by Kwong, but I bought more Tesla recently because it's not a car company, it's really an energy company. And I think when we start looking at the visionaries like an Elon, or like a Brian of Coinbase and others, I think that's really what you're investing in when you're getting involved in these kind of growth stocks, is like, how are you willing to bet that they're going to figure something out and be at the forefront of figuring whatever those certain things are out. So I think Coinbase really falls in that very risky category, that if you don't have a ton to put in right now, maybe think of more stable stocks. But and the last thing I just wanted to mention, because I know there's a lot of direct messages just about connecting. I'd be happy to connect with everybody on the group. I think, Sam, what you've created here is such a great group on Facebook, so I want to say thank you for that. And this is my first event, and I'd be happy to connect, so I'll put my LinkedIn there too. And the one thing I just will mention, for especially the young folks in the group, and anyone really, of course, but younger than me especially, is that the ETFs for Bitcoin, if you think about them, if in Canada we have the tax-free savings account, and Sam, I can't remember what it's called in the US, but you guys have the similar things. Those are really great opportunities, if you think about it, to have exposure to Bitcoin without having to hold Bitcoin directly. And as well, if you could put it in your tax-free savings account, whatever I can't remember the name, sorry, whatever the equivalent is.
IRAs.
That's right.
Roth
there you go.
especially.
Yeah. Yes, because especially for those that are that mentioned their junior investors or whatnot, that might be something really great to just buy some of that and sit on it, and hold it within your tax-free savings account for like a decade to come, because that I think would be a huge opportunity for all of you, even if it's just a small amount now, and you want to get some exposure, less riskier, or rather still risky but higher advantage points in the next 5-10 years. So I just wanted to mention that one quickly, but happy to connect.
Fantastic.
I fully agree. I'm gonna put these 2 cents about ETFs. One is, I do have a Roth IRA. In the earlier days, there were no Bitcoin assets that you can put into your Roth IRAs. So I went to buy GBTC. So there's a whole problem about GBTC trading at not a premium, but the opposite, a discount, because ETFs are coming up and all that. So what it is the underlying asset is worth more than the price of GBTC. GBTC is actually not an ETF, it's a trust. So if you want to consider ETFs, which is a great idea, Jackie, thank you, and we should, I think a slight wrinkle there is GBTC. GBTC will be an ETF when one is allowed here. They've been trying and trying and trying. So it's trading as a discount right now between 5 to 9%. So when they become an ETF, the underlying asset is basically going to come to realization. That's another extra few points. I mean, this may not happen, it may happen, but they are converting into an ETF. So in terms of an ETF play, GBTC will become one. It's a US company. And because of discount that you can buy in, it could gain you 5 to 9% extra. I think it's a matter of time because the underlying asset is there. Okay. My 2 cents. Thank you for mentioning
100%.
that.
Yeah.
Thanks.
Fantastic. Thank you. Do we have any final questions or thoughts that people would like to share? All right. Well, thank you very much, everyone. It has been a wonderful night. I really appreciate everyone's time and all the wonderful discussion that we had tonight.
Thanks. Bye, everyone.
All right. Have a
Been a
wonderful
pleasure.
night.
Take care.
Bye, thanks.
Thank you.
Thanks, Sam.
Thank you.
Hey, Sam, I think you have to send an invitation for the next section, I think. Because I tried clicking the link. And yeah, it just goes to the link and it's dead. It can't go anywhere.
The next section?
Aren't you having a Clubhouse or something?
Clubhouse. No, so that one we're going to have we're going to have weekly discussions on that. But we don't have one scheduled at the moment. Yeah.
Oh, I must have read that old email then. But just so you
Oh,
know
yeah.
too, like I said, I click the link that you sent out. It goes
Yeah.
nowhere because we don't have an app. Anyways, thank you so much
Oh,
for
okay,
putting this
got it.
on. Super.
Yeah, you're welcome.
All right,
If
have a
you,
good time. Have a good time in Florida and you're diving.
thank you.
Post
Thank
some
you.
pictures.
I'm looking forward to it.
See
Thank
ya.
you. See you.
Thank you.